Hi, and welcome back to Velocity Banking South Africa. In the last video, we talked about what Velocity Banking is and why it matters. In today's video, we are looking at how we can turn the theory into practice. We are focusing on how do you start applying the concepts that we introduced from last week. So first of all, before we go into any details, let's do a recap of last week's video, where we defined what velocity banking is. So velocity banking is about using timing of cash flow and credit facilities to reduce interest and pay down debt faster. It's not magic, it is math. And it becomes powerful when used consistently. So the first step of doing this velocity banking is knowing your numbers. That is just understanding your banking. First step, you look at how much you earn after all the deductions, not just the tax, your medical aid, if you have medical aid, and all the other deductions that your employer deducts from your salary. So you must understand what is it, or how much are you earning after all those deductions have gone through. And then secondly, we will look at your monthly fixed expenses. That is your rent, your electricity, your transport, your kids' school fees, and all those kind of things that you need on a monthly basis, that you know, definitely this month I need groceries. So you put that on a piece of paper. And also you have to look at all the debts that you have, whether it's your credit card, it's your home loan, it's your car finance. Put all of those things on a piece of paper, or a notebook, or a spreadsheet if you're tech savvy. You put everything together, you put everything down, you know your primary expenses, you know your how much you owe who, and then that is what you will be working with. So the next step then is to check how your money moves. So on a monthly basis, you know, on the 1st of every month, my rent is due. Or on the 15th, I have to pay my credit card. So understanding that also helps you with velocity banking. So you could build a nice table, or the spreadsheet that I talked about earlier. You look at when your salary hits your account, what expenses take place first, what you have left over, and then you can quickly chart this and then track it throughout the month. And then the second step is understanding or choosing your credit facility that you will be using. So in South Africa, we have credit card or an overdraft. You will choose between what has more, or which credit facility has got more funds for you, because you will need a lot of money that will be able to cover all your monthly expenses. So in velocity banking, we have credit card or overdraft. It becomes your cash flow hub. Like I said, it must have a reasonable balance so that it's able to cover all your monthly expenses. The goal here is not to borrow more, but to leverage the timing of money entering and leaving the account using the interest, using your salary to offset the interest. So I will not go that much into detail in this video, but we just get the core concepts that we are offsetting the interest rate using our salary, whether on a credit card or an overdraft facility. And as we go further, maybe we'll add more methods that we can use. After you've then set up your Velocity banking vehicle, try and test it for a month. First of all, let your salary go into the chosen facility first. So if it's your credit card, as soon as your salary lands on the 1st or the 15th or 25th, or whenever it gets into your bank account, transfer that money immediately to your credit facility. Like I said, using the credit card. So transfer that money to the credit card, and then from your credit card, then pay the essential bills and expenses from it. I understand in South Africa, we cannot pay a home loan or your car finance from the credit card. But since we've put in our whole salary into the credit card and we've offset the high balance, so now you can transfer the amount that you need for those things that cannot be directly taken off the credit card. So if it's your car finance and you need 3,000 rand, then sure, you take at least maybe 3.2 to your other account so that it doesn't bounce, because we do not want bounce debits, as they also have negative impact on us. So ensure you have sufficient money, amount for whichever accounts that you'll be debited from. You will have more than enough money. So from your credit card, you just transfer that amount. And whatever you can use paying your credit card, do not transfer that money. Use your credit card directly. And then just track on a daily basis how your balance shifts. Like I said in the previous video, we're not going to be splurging now, seeing that we have a huge balance. Now we're going to be eating out to know that the goal is still we are paying off our debt. So for this month also, focus, pay your bare minimums, your living expenses, your debt, no extra things. At this point in time, we do not have money to pay for extra things. And then see how much your actual interest rates changes compared to whatever debt elimination process you are using. Usually, if you have a credit card, you will get that statement that lists everything that you've used it for, and then it tells you how much interest that they'll be charging you. So just compare it probably with the previous month when you were not doing Velocity banking compared to this month when you are doing this Velocity banking, just to see if this thing works or not. And then after that, you can come back to me and thank me. You will be rich, Mose. For today, we will stop our video here before it becomes too long, but I can guarantee you, if you do these first steps, knowing your numbers, understanding your cash flow, choosing your facility, and testing for a month, you'll already be ahead. Ahead of most people using different forms of debt elimination. So thank you for being with me today. Please tell your friends about this lovely channel and how we are planning to be out of debt. And possibly in the next 6 months, some of you will be out of debt if you follow this method that I'm telling you about. Because for me, I saw that difference within the first 6 months. I was able to pay off my credit card, and it didn't even feel like I missed out on anything. So thank you so much for viewing today's video. And in the next video, we will continue with more lessons of velocity banking. Please share this with your friends, your family. And then if you found this very useful, please really do share. In the next video, we'll build a simple velocity banking spreadsheet that you can use month after month to track how you are doing. Thank you.